So we are doing October, November 2023, paper number 11. With me,
Yeah.
the MCQ paper, 30-mark paper, and you have to complete it in 1 hour. 1 hour means 60 minutes. If you say
Yeah.
60 minutes, that means 2 minutes for one question, not more than that.
Okay.
Come on, read the first part.
Which sources are external short-term sources of finance for a limited company?
Okay. It should be external, short-term sources. Come on, tell me. Bank
So,
overdraft. Is it internal
yeah,
or external?
external.
Then
Retained earning is internal. Share
share
capital, external.
external. Share
Sorry,
capital
share capital.
owners, right?
Yeah, internal, my bad.
Okay,
And trade
fine.
credit is external.
So
So external sources now. So the answer would be 1 and 4, which is B.
1 and 4, which is B. Okay. Next one.
A sole trader settles an account payable in full with her own money. This transaction has not been recorded. What will be the effect when this is recorded? Okay, with her own money it is now.
He settles an account payable in full with her own money. Okay.
Yeah,
The sole trader is settling accounts payable in full with own money. If own money is coming in the business,
then capital would decrease.
it decrease.
Sorry, capital would increase because own money is coming in the business.
So capital is increasing. If I say capital is increasing, then which option you would see?
Option number C.
Liability is decreasing and capital is increasing.
Yeah.
Come on, go to the next one.
Sally had 1,000 in bank when she paid 1,500 to buy goods for resale. The bank allowed the payment. How is the transaction recorded in Sally's books of account? Option A. Account debited inventory 1,500, bank 1,500.
Okay, wait.
Option B.
Sally had 1,000 in bank and she paid
Yeah.
1,500.
Huh.
Okay, that means money is going out from the bank. How much?
500.
Oh my God. How much is the
Overdraft is
money going out? You just have purchased
1,000.
for 1,500.
Yeah, so 1,000 is going out.
From the bank, 1,500 is going out, right?
Yeah, but she only had 1,000 in bank.
That's not the problem. You have purchased goods for 1,500 through bank.
Okay. Huh.
So you have purchased goods of 1,500 through bank. What will you record? What will be
Purchase
the
debit.
journal entry?
Purchase debit bank credit.
So option C.
Okay.
Okay, don't get confused. What you had, what you did not have. You have purchased through bank. You are
Huh.
Sally.
Okay.
Okay, so you will record this transaction.
So no overdraft or nothing will come in this.
Nothing.
Okay.
Read this.
Which items identify revenue expenditure and a capital receipt? Capital receipt is basically getting
Perceived
money.
revenue expenditure. Yeah, capital receipts is getting money from.
Like no, getting money on a non-recurring basis, like from sale of asset and everything.
Okay, fine. Revenue
So
expenditure is something that we are more clearer with, right?
yeah.
Okay, fine. Come on, tell me.
The option is option number B.
Huh? Tell me which one is revenue expenditure.
In all this, discount allowed is revenue expenditure, repair of motor vehicle.
Discount allowed is revenue expenditure.
No, sorry, a repair of motor vehicle.
Which items identify revenue expenditure and capital receipt?
Okay.
Okay, fine. So let me
Is the
see.
option D?
Let me check. Carriage of for a non-current asset. What is this?
This is a capital expenditure.
Fine. Commission received.
Revenue income.
Okay. So I have two revenue expenditure. One is discount allowed and one repairs.
Yeah.
So it could be option C or option D. Now, what is a capital receipt?
When you get money or rarely, like once in a year or something, non-recurring basis.
So
So
cash
the
drawings is not receiving anything, right?
yeah.
Yeah, so what will you be a capital receipt?
Option number D.
Okay, fine. Go to fifth one.
Which statement identifies why depreciation is provided on non-current assets? Is that the cost is allocated?
Can you read loudly?
So that the cost is allocated to periods that benefit from them. So
Yeah,
that
no,
the realized
depreciation. In
yeah.
depreciation, you allocate the cost to the period that you're benefiting from the use of non-current assets. So this sounds correct.
Huh.
Realization? No. Depreciation is
No.
which principle?
Prudence and accruals.
Okay.
Matching and prudence, na? Yeah.
C option?
So that there is enough cash in the business to replace them. No, no, no.
Why no? Because depreciation is a non-cash expense.
Yeah, and it reduces the value also.
Then
So that they are shown at market value. No, they are shown at net realizable value.
net book value.
Huh.
Option?
A.
Go to the next one.
New equipment costing 40,000 with an estimated residual value of 6,000 was acquired at the beginning of the first year. On the same date, business made the following payments. The equipment
What do they want us to find? Go there.
carrying amount for this item at the end of the year.
Okay, fine. So you have an equipment which is costing 40,000, estimated residual value 6,000.
Hmm.
This was acquired on Jan 1.
Yeah.
And
So I'll calculate.
they want the
I have a
carrying
question.
amount of which item?
This only, this one.
Okay, fine. So costing is 40,000.
Yeah.
What is the cost of that item? Delivery will be included in the cost.
Yeah.
Installation will be included in the costs.
Huh.
Okay. Maintenance contract will be included in the costs.
Will it be? I'm not sure.
This is a revenue expenditure. So
Okay,
it
so
will
it
not
will
be.
be
So
not
cost
be
of this
included.
item is how much?
1 minute, I'll tell you.
45,000 plus 7,000.
No, miss.
52,000.
Yeah, it's 52.
Residual value is 6,000.
Yeah.
Estimated useful life.
Miss, I'll calculate the depreciation, na? So I'll do 52,000 minus 6,000 upon 8.
Yes.
Okay, 1 minute.
So I have depreciation per year is 5750.
Yeah, 5750.
Now carrying amount.
So carrying amount, is it like the net book value?
Yeah.
So I'll do 1 minute, I know this. I'll do 52,000 minus 5750. The answer is 46,250.
Okay, very good.
Hmm.
Go to the next one.
Which error would not be identified by preparing a trial balance? A contra entry that had been entered twice in the
Wait,
sales ledger.
first tell me which errors are not identified when you prepare a trial balance.
I don't remember this.
Okay. 1 minute. So which error is not identified when you prepare a trial balance? One is error of omission.
Okay.
That is not entered. That is not identified when you prepare a trial balance. One is,
This commission will also be there, no?
what is commission?
Like error of commission is basically wrong amount.
Wrong amount.
Yeah.
One would be compensation.
Okay.
One error compensates the other.
Yeah. So like.
Okay.
Okay.
And wrong name.
Okay. What is wrong name is this now principal.
That is revenue treated as capital.
Oh, okay. Okay.
Hmm?
Yeah. Got it.
Contra entry had been entered twice only in the SLCF. It had been entered twice only in one account.
Yeah.
So this will be identified.
Yeah.
You had purchase of 495, but you recorded as 459 in the purchase journal. That means in your first books of prime entry, you have recorded a wrong amount.
This is commission.
Wrong amount is original entry, na?
No, wrong amount is commission. This I know.
Wrong amount is wrong name is commission.
No, miss, wrong name is this. What we call original entry is wrong name.
I'll give you 2 slaps.
I swear you saw. I commission is actually wrong amount. I swear because commission money.
So you've passed an entry with a wrong amount everywhere. Will this be identified while preparing a trial balance?
Yeah.
Yeah.
Huh.
Why?
No, sorry. Original entry is not identified. So no.
So it is not identified. Come on, read the next one.
During the year, a sole trader
Hey,
withdrew
this one read. Carriage inward was 57 in the cash book and you recorded as 75 in carriage inward.
This is also wrong. This is.
It was already 57 in cash book and you put it some different amount in inward. So this will be identified.
Yeah.
It was discount allowed. You treat an expense as income. So when you allow discount allowed, you say discount allowed debit, trade receivable credit.
Yeah.
And you treated and you made this discount received. So you did discount receive credit and trade receivables credit. You did not pass any debit entry. So even this will be identified. So which one is not identified?
The B one.
Okay. I'm giving you time, digest it, then we'll start again. Can you read the next one?
Yeah. During the year, a sole trader withdrew $3,000 cash from the business bank account. Accounting entries were made for a debit of 300 to the drawings account and a credit of 3,000 to the bank account. In addition, 500 had been omitted from discount received account and trial balance. What was the balance on the suspense account before the error were corrected?
Okay, wait. Okay. So you had withdrawn 3,000 from business bank account.
Yeah.
What entry did you make?
This will be drawings, debit, cash, credit.
So you did drawings debit.
Hmm.
You did drawings debit 300. Yeah?
Okay, huh?
And what you had to do?
You had to do drawings debit 3000.
You had to do drawings debit 3000. That
Huh.
means drawings had to be debited by
3000.
3000. So when you reverse this, drawing will be credited by 300.
Yeah.
So your rectification entry will be what?
1 minute drawing. Rectification will be drawing debit by 2700.
And
That's it now, and cash credit.
hmm? Okay. So
Huh.
suspense is credited, right?
Yeah.
Suspense would have a credit balance of how much
2700. Before, yeah, for this entry.
for this entry? Go to the next one.
Suspense credit 2700. 1 minute. Huh. In addition, 500 had been omitted from the discount received in the trial balance.
Okay. 500 had been omitted from the discount received. So if I've
Yeah.
omitted things, I have to do discount receive credit
Yeah.
and suspense debit.
Suspense debit. Huh.
So suspense would have a debit balance of how much?
500 then.
Okay. So suspense has a debit balance of 500
Yeah.
and suspense has a credit balance of
2700.
one debit and one credit.
Hmm.
So what balance will it have?
More wala na. So
700? Sorry.
suspense, like whichever side is more amount, that will be the balance. No.
Yeah, so suspense would be credited by 2200.
200.
Now
Yeah.
this suspense is credited when you're correcting the errors.
Huh.
So when you're correcting the errors, once you're correcting, these are the rectification entries, right?
Yeah.
So when you will correct the errors, you will credit the suspense by,
2200.
okay, this is the rectification, okay? So what
Huh.
balance did the suspense have before the correction?
3200.
For correction, you will have to credit the suspense by 2200.
Yeah.
So you say your suspense account would be credited by whatever amount, total balance 2200.
Yeah.
So what was the difference in trial balance before correction? 2200 on the debit side.
Okay. Huh.
You with me?
Yeah.
You're not with me.
No, I understood the 2200 on the debit side because you have to correct the trial balance, so you have to put it on the debit side.
So for correcting it, you have to credit suspense by 2200.
Yeah. And
So
before
before the
correcting,
errors were corrected, suspense has a
credit
balance.
balance of 2002. Huh. Okay,
This
got
is
it.
for correction. So before correction, it might have a debit balance.
Okay.
Yeah.
Yeah.
Okay. So whatever you find for suspense, this is for correction.
Huh.
So before correction, it would be the opposite.
Hmm.
Are you with me?
Yeah. Now I got it.
Come on, read the next one.
Amount will stay the same only, na, but.
Yeah.
Okay.
So for correction, you credit the suspense. So before
Hmm.
correction, the difference in trial balance would be on the debit. That is why you credit suspense.
Hmm.
Are you with me?
Yeah.
Okay, go ahead.
A company's bank statement showed a credit balance of 2000. The following issues were found. A receipt of 2700 and a payment of 3000 were recorded on the bank statement. Both had been omitted from the cash book. Bank charges of 500 were correctly shown on the bank statement but had been recorded as 600 in the cash book. Okay.
What do
What
they
was the
actually want from you?
balance of cash book before any adjustments?
Okay. Bank statement shows a credit balance.
Hmm.
Okay. Bank statement shows a credit balance. That means it is a bank overdraft.
Yeah.
This is bank overdraft as per what?
As per cash book.
As per what?
Bank overdraft as per what? Bank only.
Bank statement, not as per cash
Oh,
book.
okay.
They want us, they want us to know that before the issues were found, what is the cash book balance? Are you with me?
Yeah, got it.
Okay, fine.
Oh.
So there were these issues that were found. Come on, what is the
Hmm.
issue? Read the issue one.
A receipt of 27 and a payment of 3,000 was recorded on the bank statement. Both had been omitted from the cash book.
Okay. You had received 2,700
Yeah.
and you had paid 3,000.
Hmm.
That means an extra payment of 300 was recorded on the bank statement
Yeah.
and both was omitted from the cash book.
Yeah.
Okay, fine. So I assume that my balance as per the cash book and bank statement, if it is the same. So we
Hmm.
had forgotten to record the receipt.
Hmm.
Yes,
Yeah.
this is negative 2,000.
Yeah.
I had forgotten to record the receipt. So I will add
Yeah.
the
Yeah.
receipt.
Okay.
I had forgotten to record the payments. So
So
I will
you'll
minus the payments.
minus it. Huh.
Okay.
Yeah.
Go to the next one.
Bank charges of 500 were correctly shown in the bank statement but had been recorded as 600 in the cash.
Okay. So you have recorded how much extra in the cash book?
100.
Minus 100. Come on now, check what was the balance.
1 second.
CDR.
Okay.
Your balance as per bank is 2,000. It is not overdraft, it is credit balance. So that means the money is coming in. It is a positive balance.
Okay.
If I have to find the cash book balance before any adjustments were made. So if I say
Huh.
this is the balance as per cash book, which is the balance as per the bank statement. So from the bank statement, you have added the receipts
Hmm.
and you have subtracted the payments. Are you with me?
Yeah.
You have added the receipts and you have subtracted the payments.
Yeah.
They want my cash book balance before making any adjustments. That means I don't want to add the receipts and I don't have to subtract the payments. Are you with
Hmm.
me?
Yeah.
I don't want to add the receipts. I don't want to subtract the payments. So 2,000 is my balance. What I added, I will remove. So I will remove 2,700 and I will add back 3,000. Are you with me?
Yeah.
Because they want my cash book balance before these adjustments. That means this what is adjusted in the bank statement should not get adjusted.
Understood.
Are you with me?
Yeah. Yeah. Yeah.
Okay, fine, no problem. Now, bank has done the bank charges 500. They have removed the 500. Yeah,
Huh.
they have
Yeah.
removed 500 and I have removed 100 extra. So this I have
Huh.
already done and the bank is also done. But I have also removed 100 extra and I don't
Okay.
want to rectify it. I want the cash book balance before adjustments.
So then 600 only it will be.
So now I don't want to rectify it. So now I will do this and check 2,000 minus 2,700 plus 3,000 minus 100. So your balance as per cash book before any adjustments is 2,200.
Okay.
Please explain me again.
Okay, see. So since your cash book is positive, so it will be positive 2,000 balance. Okay. Then a receipt of 2,700 and a prepayment of and a payment of 3,000 were recorded on the bank statement that had been omitted from the cash book. So you will subtract the 2,700, okay, and you'll add the 3,000 because the
Because
payment
you're
had
not
not.
asking for adjustment. So you don't have to adjust it. This is already adjusted in the bank statement and you don't want to adjust it, so you reverse it.
Oh, okay, fine. Huh? So you reverse it. So that is why minus and plus. Okay. And bank charges of 500 were correctly shown in the bank statement, but and recorded as 600 in the cash book. So since the 100 is extra, that's why you subtract it.
Because you don't want to adjust it.
Yeah, yeah.
Now this is all related to control accounts.
Okay.
You read the 10th one.
Why might a business maintain sales ledger control account as a part of double entry accounting system? To facilitate prompt preparation of financial payments, to help reduce fraud, to provide details of all sales transactions. 1 and 2.
Next one.
The purchase ledger control account showed a balance of 79,500 before the following errors were taken into account. Can you go niche?
Yeah, tell me.
A contra of 1,500 between the purchase and sales ledger had been omitted. Okay, cash purchase of 1,200 were made on the last day of the period had not been
Okay,
recorded.
record, pause on. Which figure of trade payable should be included in the statement of financial position? Okay. Tell me
Miss,
what.
1 second.
Yeah. Tell me.
The 11th one, na?
Yeah.
Miss, I didn't understand that. Do I have to make a PLCA?
Okay, come on. The PLCA showed a balance of 79,500 before the errors were taken into account.
Yeah.
PLCA, that means the supplier account.
Huh.
Normal balance is what of a supplier?
Credit.
Credit balance. So normal credit balance, below that credit purchases, everything else on the debit side. Are you with me?
Yeah.
You had omitted a contra entry. So what will
So
you do?
I'll put that on the debit side.
Okay, fine. Cash purchases of 1,200 made on the last day had not been recorded.
So I'll
Will
put that on the
cash
credit side.
purchase, will
No.
cash purchase come in supplier account?
No, only credit.
Only credit.
Hmm.
Come on. Discount receipt had been overcast. Discount receipt
Okay.
comes on which side? Here.
Debit side.
Overcast which side will you write?
Or
Same side
credit
or
side.
opposite side?
Opposite. So credit side.
So discount receive overcast how much?
6,200.
Return inwards undercast. Undercast which side?
Same side.
Undercast same side. Okay. Now find the
Hmm.
balance of the PLCA.
Yeah, 1 minute.
Okay, now tell me return inwards is which balance? Return inward is sales return, right? Ashita? Ashita?
Yeah. Sorry. I was
Will
on
the
mute and
sales
I was
return
talking.
come over here?
No, it won't come.
The sales return will not come over here. So I will not record this. So what is the balance?
1 second, I will tell them.
79,500 plus 6,200. This is 85,700. Minus 5,300. So 80, 400.
Okay, got it.
Got it?
Hmm.
Go to the next one. Did you do the next one?
Yeah, can I explain this?
Yes.
Okay. So basically, the allowance for irrecoverable debts to be charged 5% of trade receivables. So 5% of 52,000 is 2,600. Okay.
What? I did not understand.
The allowance of irrecoverable debts to be changed to 5% of trade receivables. So new will be 5% of 52,000, which is 2,600. Okay.
Okay.
Then old minus new करेंगे. So 3,000 minus 2,600 is equal to 400.
5,000, 5% of 5,200 is how much?
2,600.
Okay. Then, yeah.
Then after that, old minus new we'll do. So 3,000 minus 2,600 is equal to 400.
Hmm.
Okay. So then irrecoverable debts are basically, they are decreasing. Okay. So the profit will increase by 400 and the current assets will also increase. So the option is D.
Profits will increase by how much?
400. So the option is D.
D. Okay.
Yeah.
Go to the next one. Did you do this?
Yeah, this also I did. Should I tell you?
Yeah.
A trader prepared her financial statements but made no adjustments for accrued rent receivable. So accrued rent receivable is basically an outstanding income. Okay. So an outstanding income is a current asset. Okay. And if you're not recording it, that means the current asset will be understated. Okay. Current liability will have no effect. And the profit for the year will also be understated because income is less. So the option is D for this also.
Okay. Next one.
It's the only I did. Next one I didn't understand.
Okay. Sole trader, can you read this? They want the profit for the year.
Yeah. A sole trader calculated her draft profit for the year as 50,000. She asked the accountant for advice regarding 4 issues which she thought might affect the draft profit. A customer debt of 2,000 written off as irrecoverable.
Should you
She
write?
account. Huh?
Should you write off?
Yeah, irrecoverable. So expense minus.
Hmm.
She accounted for drawings of 10,000 as if they were staff salaries.
Is it correct?
No.
So what she should do?
She should add the 10,000 back.
Okay.
Okay. Then she wants to increase the value of non-current asset by 20,000.
She should do?
That's I don't know. This I don't understand the third one.
She wants. Okay, she
Yeah,
wants
so
to do. But she's not yet done it.
no, she should not do that.
Okay, fine. And
Okay.
expense overstated.
Yeah, so you minus it.
So profit is understated.
Huh.
So you will add back.
Okay.
So
So she'll do 50,000 minus 2,000
what should be her new
plus,
answer? Yeah.
plus 10,000
Hmm.
plus 5,000.
Hmm. 63.
Yeah, answer C.
Next one.
Which items in book of partnership would increase the profit available for distribution to the partners? Discount received, interest on capital, interest on drawings, partnership salary. Okay. So
Which items would increase the profit available for distribution?
interest on capital, no. Expense, it is.
Income from
Partnership,
partners.
yeah. So the option B.
Sorry,
Option B.
why?
Because interest on capital is an expense and partnership salary is an expense in
So
the
these
income
two things
statement.
will increase
Yeah.
profit available for distribution. Okay. Go to the next one.
L and M are in partnership, sharing profits and losses in proportion to the capital investment.
Okay,
The
first I
firm,
can see before reading, what do they want from me?
residual profit. So this I can do.
This of whom? L.
Huh?
This of
L,
whom?
huh? Of
Okay.
L.
So you start with profit before appropriation.
Yeah.
How much?
28,900.
No interest on drawings.
Yeah.
No interest is charged on drawings up to 10,000. And 5% is charged on drawings above 10,000. So
Okay.
nothing for L.
Yeah.
And for M, what would be the interest on drawings?
1 minute. 5 upon 100 into 12,000. 600.
2,000 into 5%.
With 5% into 12,000, which is equal to 600.
No, darling. 5% is charged on drawings in excess of 10,000.
Okay. So 2,000 का करना है 5%.
Yeah.
Okay, fine.
100.
100.
So 28,900 plus 100. How much? How much?
29,000.
29,000. Profits and losses are shared in the proportion of capital invested.
Okay, wait. 68,000 divided by
68 plus 102 is how much? 170.
which one? 2 upon 3 the profits are shared.
Okay.
So L is 2 na. 2 upon 3 my L is 2. So 2 upon 3 into 29,000, which is equal to
2 upon 5 into 29,000. It's 2/5.
yeah, sorry, 2 upon 5 into 29,000.
2/5.
11,600.
So option
B.
D. Can you tell me what is a right issue?
Right issue is basically when a limited company issues the shares in order to raise more profit, like directly from the how do I explain it? Like it's directly from the share
Additional
premium.
funds can be raised cheaply.
Yeah.
Control of company remains with the existing shareholders.
Yeah.
Yeah. It is an alternative to dividend to reward existing
No.
shareholders. This is what? Which issue?
Yeah, it's no, it's not alternative to dividend. Like
Alternative.
that is bonus share.
Yeah. So it will be option.
1 and 2. So option A.
Come on. Next one. They want total equity.
Okay.
Okay. So 1st January, your total equity was 350. Yeah.
Yeah.
Then you issued 10,000 shares for 1.5 each.
Okay.
So 10,000 into 1.5,
I'm doing that only.
15,000. Remember, total equity means share capital plus retained earnings plus securities premium total. So I'm just adding it.
Yeah.
Then you paid dividend of 0.10 per share. So you paid dividend of 0.10 into how many shares?
into 1 minute, 10,000.
110,000.
Oh yeah, because you have to add, sorry, huh?
110,000
Yeah.
into 0.10. So you gave 11,000 as dividend.
Huh.
Proposed dividend, will it come?
No.
And profit for the year?
Yeah, it'll come 26,500.
So you will add. What will you get?
1 minute.
350 plus 15 minus
Plus
interest
11.
plus 26,500. So total of 380,500.
Yeah.
Option C.
Yeah, got it.
Okay. Now I want you to try from 19 to 25 and then I will again resume meeting. So you have to. Let's go to the 19th one. Tell me. Read someone.
Why would employees be interested in their employer's financial statements? The A1, to assess whether the business can continue to trade in the foreseeable future.
Why do employees want to know this?
So this A is the answer, to assess whether the business can continue to trade in the
But
foreseeable
why are
future for
employees interested to know this?
So
job
that the
security.
job is kept.
Job security.
Yeah, so A is the answer.
Not to do this.
To do what?
Not to assess salaries of competitors.
No, that will not be there in statement. No.
They don't know competitor's salary. Okay.
Yeah, the competitor salary will not come in the business's financial statement.
So all of this has no relevance. Come on, go to the next one.
A business received a 5-year loan of 40,000. The loan was paid into the bank current account. What was the effect of the loan? Option A, current ratio decreased, return on capital employed decreased.
Okay,
B, current
wait. Loan was paid into the bank current account. What does this mean?
that like the loan was paid directly to the bank current account. No.
So bank current account, that means bank balance increased.
Yeah.
If bank increase means what?
Bank increasing means the bank balance increasing. Yeah.
Current assets increased.
Yeah.
If current assets increase means what?
The return on capital employed will also increase. No, the
First you
return on
talk
capital.
about current ratio, darling. I don't want you to check the marking scheme and give me an answer.
I'm not checking. I don't have.
Tell me, if current ratio increase means what?
Means that the current.
If current assets increase means current ratio will also increase. Are you with me?
Yeah.
Now we are talking about return on capital employed. What is the formula for return on capital employed?
Profits from operations upon working capital.
Working capital. Wow.
Capital employed.
Sorry, capital employed.
Okay. Profit from operation divided by
Capital employed.
How do you get capital employed?
Non-current liability plus capital.
Own funds plus loan funds. So you're taking a 5-year loan. That means your loan fund is improving, increasing.
Yeah.
The capital employed is increasing.
Okay.
Yeah?
Yeah.
If your capital employed is increasing, suppose initially you were getting 10,000 over 50 lakh. You are increasing your capital employed. Now also you're getting 10,000 over 55 lakh or 50 lakh 30,000. So that means your return on capital employed percentage will decrease. Yes or no? Check. 10,000 50 into 100 is how much? Check. 10 upon 15 to 100 is how much? This is 20%.
20%.
And 10
Yeah.
divided by 55 into 100 is how much? 18.18.
Yeah.
It means you're increasing your capital employed, but the return is same. Okay? So your return on capital employed is decreasing. So your option would be C. If you don't understand directly, try to use the formula, feed in some imaginary figure and try to increase the denominator or the numerator,
Okay.
whatever they tell you.
Hmm.
Go to the 21st one. What do they want from you?
Okay. This should I say?
What do they want from you?
They want to know the gross profit after the error. So the error is that the closing inventory is understated by 10,000.
What do we treat closing inventory as?
An asset.
No.
Yeah, closing
What do
inventory
we
is the
treat
current
closing
asset.
inventory as? Income.
Yeah.
Yeah.
Okay. So income was understated.
Huh.
Hmm?
Yeah.
Yeah, income was understated.
Income was understated. That means profit was
Oh, was
understated.
understated. Huh.
It means gross profit was also understated.
Huh.
So gross profit will increase by 10,000 if I correct the error.
Yeah.
So the new gross profit will become how much?
70,000.
70,000. What is the formula for gross profit margin?
Gross profit upon revenue into 100.
So what will be the effect?
No, the answer is 25%.
Into 100. So the new gross profit would be 70,000 divided by 280,000 into 100. So answer would be 25%. With me?
Yes.
Yeah.
Come on. Over here, what do they want?
The
What do
company's capital employed.
What do we get capital employed? How? Okay. What is the formula for capital employed?
Own funds plus borrowed funds.
Own funds plus borrowed funds. Okay. They've neither given me own funds, they've neither given me borrowed funds.
Yeah.
They've given me the gross profit margin. So I will start with what I have. Will start with revenue minus cost of sales. It will give me gross profit. Are you with me?
Yeah.
Yeah.
16 lakh is the revenue. Margin is 20%. So can you all give me the gross profit? How will you get the gross profit?
Cross multiply.
Cross multiply. Oh my God.
Yeah, you have to do, won't it be 16 lakh into 20 divided? No, wait, what am I doing?
20% is margin, right? So it'll
So
be
directly 20% of revenue.
yeah, of 16,000 you'll take.
So what is the gross profit?
1 second. 320,000.
320,000.
Now 160,000.
Yeah?
1280.
320,000. Are you with me?
Yeah.
Yeah.
Okay. Minus the operating expenses, I will get profit before interest and tax. Are you with me?
Yeah.
Yeah.
What is operating expenses to revenue? How much it is?
12%.
That means operating expenses as a percentage of revenue is 12%. That means 12% of revenue is operating expenses.
Yeah.
So can you give me operating expenses?
Huh.
It is 12% of revenue. Revenue is 16 lakh.
It is 192,000.
192,000.
1,92,000. So profit before interest and tax will become how much? Will it become 128,000? I don't know. Are you sitting with calculators or without calculator? Are you all sitting with calculators or without it?
Yeah, just got.
Yeah, okay, I understood you minus.
I'll put it on pause. I'll pause the video. Do it yourself. Then. So your profit before interest and tax is 128,000. Now let's put the formula for return on capital employed. What is the formula for return on capital employed?
Profit before interest upon capital employed into 100.
Into 100. What is profit before interest and tax?
128,000.
I don't have capital employed. What is the percentage of capital employed?
16%.
So what will be my capital employed?
120. Miss, can you write 16% over there so I don't get confused? Okay. You have to cross multiply.
Will it be 800,000?
Yeah, 300,000.
Yeah.
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 128,000 divided by 16 and 200.
Yeah.
Yeah.
Yep.
So option C. Go to the next one. Read. There is a knack to read the MCQs.
A map.
What do they want you read first?
Okay. They want the
Benefits of
benefit.
just in time.
Huh.
What is the benefit of just in time?
All three.
Okay. It increases
Yeah,
efficiency, it
so.
reduces warehouse costs, it reduces waste.
Hmm.
Now
Yeah.
for the 24th, I want you to first read, try, and then I will start with the working. Okay?
Yeah.
Come on, tell me.
Okay. See, so in this,
They want the pay of each member.
yeah, so the normal pay is 16 hours, okay, per $16 per hour, and each member works for 40 hours. So 16,
$16 per hour.
yeah, so 16 into 40, which is
based
equal
on
to
the
640.
output, which is based on the output, right?
Yeah.
And for every production in excess of 500, you're giving a bonus of 8.
Yeah.
Bonus is shared equally and paid on weekly basis.
Yeah, so there are 560 units produced. So 60 units are extra. So 8 into 60, which is
Can you first
480.
give me the normal wage?
Normal wage is 16 into 40, $640.
Into 40 hours.
Yeah.
How much?
640.
$640.
Yeah.
Okay. And how much have they produced?
They've
Extra.
produced 560 units, 60 units extra.
So extra production is 60 units. And for 60 units, how much are you giving them?
$8.
Okay. So 60 into 8 is how much?
480.
480.
Yeah.
Then what are they saying?
That's it. What is the member? What is the pay of each member of the team?
The bonus is shared equally and paid on weekly basis.
Okay.
So 480 is shared between how many employees?
Oh, between 8 employees, you have to divide 480 by 8.
480 is shared by 8 employees.
So one employee will get 60.
So one employee will get 60. So what is the
Yeah.
pay of each member?
700.
So pay of each member is 700.
Huh.
With me?
Hmm.
Come on, next one.
Which type of business is most likely to use a batch costing system? An aircraft manufacturer? No.
This
A
is to
car?
definitely not there.
Huh?
This is to definitely not there. Wedding cake.
Yeah, wedding cake maker bhi nahi.
Construction yard is also not there.
Yeah, so the option is a car component manufacturer. That's the answer.
Okay, fine. Next one.
A company is asked to make
What
a
is
new
the
machine.
price on the job cost sheet?
What is
They
job
must
cost
read
sheet?
what they want. That means for every job, you make a cost sheet.
Okay.
Okay?
Hmm.
So come on. What is the material cost?
1100.
What is the labor cost?
30 into 14.
Hmm.
1 minute, I'll tell you. 420.
420. Okay. Company charges overheads at $10 per labor hour.
Huh.
So $10 per labor hour.
Yeah.
So how much?
$10 per labor hour. So I don't understand how I'll do this.
$10 per labor hour. So what is the labor hour?
30 hours.
30 hours. So $10 into 30 will become how much?
300.
So what is the total cost?
Okay, total cost is equal to 1100 plus 420 plus 300, which is 1820.
What is markup?
Markup is on cost, 30%.
So
1 minute into 30%, 546.
So price on job cost sheet.
1820 minus 536 करना है.
क्या add करते cost plus profit or you minus?
Sorry, add. My bad. 546. 2366.
Option.
D.
Okay. What is the formula to calculate OAR?
Budgeted activity level upon budgeted overheads.
Budgeted overheads
Upon budgeted activity level.
upon budgeted activity level.
Yeah.
If it is a capital intensive, so your budgeted activity level will be what?
Machine hours.
Machine hours. So machine hours down.
Yeah.
Option
D.
next. Read the question first.
A company provides the
This
following.
part. What is the
What is the most appropriate overhead absorption rate for each department?
most appropriate OAR for department X? Capital
Oh, this
intensive
way.
or machine intensive?
Department X के लिए machine intensive and
Machine
department Y.
intensive. That means department X should be machine hours.
हाँ.
Department Y should be
Labor.
Department Y should be labor hours.
Huh.
Which one will you take?
Wait, miss, I'm telling you 1 second the answer only.
Yeah, tell me.
Yeah, 1 minute.
Why you have to
Okay.
calculate? You have
Yeah,
only
because
one place where you know the appropriate machine for.
of course I'll have to calculate because I have to get the absorption rate now. So I found out
Charlie,
the whole.
see, for department X it is machine hours.
Yeah.
Department Y it is labor hours.
Huh.
There is only one option where this is there.
Oh, this. Okay, I understood. Okay, huh.
Okay?
Why I did then?
With
Sorry.
me?
Option A.
Okay, fine. Go to the next one.
A company makes and sells a single. Okay, what is the budgeted profit they want?
They want the budgeted profit. Okay.
Huh.
Yeah, tell me.
So 1 minute, I'll tell you
You
what to
want
do.
budgeted profit, okay?
Yeah.
The new budgeted profit.
Hmm.
So that means you first need to have the old one and then the new one. Are you with me?
Yeah.
20% reduction in selling price. Can you tell me the new selling price?
1 minute. 80 upon 100 into 10. 8.
10 into 80%.
8. 8.
Variable cost will reduce to 4.
Will reduce.
And
Huh.
sales
Okay.
volume increase by 5%. So into 105%. So new
Huh.
sales volume will be how much?
10,500.
10,500 units.
Hmm.
So sales will be how much?
8 into 10,500.
How much?
84,000.
Minus variable costs.
1 minute. 5 into
Give
10,500.
you an easy way out. Sales minus
52.
variable cost is contribution.
Yeah.
Contribution is 4 per unit
Huh.
into 10,500. What is the contribution?
I'm telling you contribution 1 minute. 84,000.
You do directly na 10,500 into 4.
No, miss, no, I won't like understand that. I'll get confused. Do normal method only I'm doing. 31,500 is the contribution.
How?
Because I did sales, which is 84,000 minus the variable cost, which is 4 into 10,500, which is 52,500, and then that
1
is
minute. 4 into 10,500 is how much?
52,500.
Do properly na. I cannot give you a calculator.
Oh, sorry, it's 42,000. My bad.
Minus fixed cost how much?
Minus 25,000.
Profit is how much?
1 minute.
How much is profit?
17,000.
Done, khalas.
Yeah.
Budgeted profit.
17,000.
Okay.
Yeah.
Contribution, how is it calculated?
So sales revenue minus marginal cost, no?
Because variable cost is also called marginal cost.
Yeah.
Okay, done.
Yeah.
So with this we complete October, November 23, paper 11.
Huh.
Okay.
Yeah.